Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, the 28th day of October 2014, and this is the daily report for gold and silver. FOMC meeting gets underway today. Minutes should be released tomorrow. In the meantime, we've got a raging equities markets with the Dow Jones Industrial Average closing over 1,700 again, 17,005, putting it up about 187 points. We also had the dollar slightly lower today, and how that all has affected our gold and silver market is interesting across the board. We do have higher precious metals. First to gold up about $3 on the day. 1228.10. It has had a low today of 1225.20 and a high of 1236.10. Interesting day in silver. Currently trading again just above $17, and that puts it up roughly a dime on the day. 1720 and 1730, that's the bid-ask spread today in terms of the high 1750, the low 1707. More on silver in a little bit. So traders, first want to take a look at the Standard & Poor's. This is the E-mini S&P 500. You can see, I believe we had a rise here when you consider of 20 points plus when it was 1958 closes at 1979. We've had a tremendous rise. Of course, as I said, the Dow Jones is now over 17,000. Now, what are we looking at in gold? Well, I talked about the fact yesterday that I was probably going to look to put out a sell signal. I am still considering that. Slightly higher today. The key is that we're at a very, very interesting juncture. It's that this 22 right here is a 23% retracement. It's a retracement of this big move. Market comes up, goes over the 38%, not quite to 60. This would be 50, excuse me. That would have been 1265. It falters right here. Now, the interesting thing about where it faltered is if we take a look, and this to me is really the key, is that it closed above this particular high here. And so because of that, I felt if it traded above this area, we could remain bullish. I also said that if it traded below this area, I would look for lower pricing. And that's exactly what we've gotten now. We haven't had that hard break as I thought we would, and the hard break wouldn't come really until we hit about 1222. So as I said, I'm still debating whether or not I want to sit this one out, meaning as we go into the minutes, just be flat. We've got a great year going for us. We've got good profits across the board. Our last couple of trades have been good, and I want to be not so much cautious, but I want each trade that we put on towards the end of the year to have a positive effect, obviously, on our overall account. So we're not quite at the top. We're in this mid-range right here. We are above 22. So as I said, I will be watching this closely, but for right now, we are sidelined. You know, traders, an interesting note. We talked about the fact that gold is really a barometer. It's a barometer for what's going on in the world, whether it's geopolitical hotspots or economic scenarios. Of course, we're trading gold here in the United States as a pair, and it's paired against the dollar. So anytime we see dollar strength, that's putting pressure on the price of gold and dollars, has to. And of course, when we see weakness, that is giving a bullish emphasis to gold. So here again, for the third day in a row, we have slightly lower pricing in the dollar. We have a runaway Dow, and that's now back over 1,700, runaway S&P, of course, so the stock market is running. And at the same time, we see nominally higher pricing in the precious metals market, specifically gold and silver. And so really, what do we make of that? And to give us a better idea, I've gone ahead and I've pulled up our half-a-day chart, 720-minute chart. And here you can easily see how we've come mid-range in terms of where we are. These hash marks here on the right-hand side, well, those are hash marks from this most recent rally here, from the bottom to the top, and then this is our 38% retracement right here at 1226. Market's trading at 1228. So as I said on Friday, really, because of that 38% could be a logical model to see something like this, where it comes in, touches down, and then moves back up. Of course, as I also said last week, because technical analysis, in essence, has got to be a lagging indicator. In other words, we are kind of like not captains of the ship, but we're definitely working on the ship, but we're sitting at the back of the ship. We're looking at the wake that the engines produce, and we're trying to really determine direction of the boat by looking at where it's been, so to speak, and it's only the captain who really knows when he'll turn that wheel. And so when we're in this really critical crux of a position, I can only tell you this. If it breaks below this point, we've got a good sell. If it bounces up from this point, we've got a good buy. But as long as we're just right in the middle of this particular area, I am reluctant to put on a position, because I really believe that it could jump off and move higher, or if it breaks, it's going to move lower, and I need to see that initial spurt, that initial break in momentum before we actually put on a position. Now, these marks that are on this side here have to do with the much longer rally, and the rally we're looking at really is from 1322 down to 1180. And when we do that, you can see the 50% mark was also the high that we got in this particular run, this particular rally. And as I said before, typically when you have a corrective wave like this and then you get a counter trend impulse wave, meaning that this isn't a bullish wave, but rather it's simply a counter trend to the predominant bearish trend that we've had, you will typically see the market move anywhere between 50 and 75% that of the move down, and I've labeled that as a sweet spot, so to speak, right in between here, and we did effectively reach the lower end of that particular cycle. So we could have seen the market rise, we could have seen a retracement, and as I said, based upon the fact that we are really at this particular crossroads, until I see it move off of this and move up, or break below it and move down, I don't believe that on a technical basis we have a clear-cut path. On a fundamental basis, if I had to bet one way or the other which way I think this market's going, and realize this is just my bet, I would bet for a break below 1226, signaling lower pricing, possibly even testing 1181. Now, this is on a fundamental basis, and it is simply based upon the fact that the equities markets is raging again, and my sense is that safe haven capital will come out of that and move into the equities markets in terms of basic liquidity flow. So traders, what about silver? We're up a dime, but we're up a dime on a day when industrial metals should be having a great boost, really a great boost from the equities markets. Dow Jones going above 17,000 today. We're certainly not at 2,000 on the S&P, but we're much closer than we've been. In terms of what I am looking at is that we're at this real critical point. I've got this one line here, and really what I'm looking at, let's see if I can just kind of move everything in, is how we saw this market kind of trade sideways for the longest time before it spiked up. We're getting that sideways activity, but if we break through below this $17 level, as I said yesterday, real support doesn't come in until $16 per ounce. Now, I'm not looking that bearish on silver right now, but I do believe that it has been disattached from the equities markets, and it is running its own race, so to speak. So we are sidelined on silver. We're looking for direction in gold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.